All right, guys, hello, and thank you all for joining us to this webinar about how to invest in real estate using your 401k or IRA. My name is Roy Gutman from Prime Equity. Prime Equity is a real estate investment company that was founded in 2005 by Yaron Shemesh and David Zoharetz. We're located in Inglewood, New Jersey, and have developed and managed over $150 million residential and commercial projects in New York, New Jersey, and in the past few years in Florida as well. Today we have some special guests. We have Yaron Shemesh, the co-founder of Prime Equity, and we also have here Zach Silver and Ryan Connelly from Madison Trust Company, a retirement account custodian company with over $4 billion in assets under custody. So without further ado, I'll let Yaron take it from here.
So thanks, Roy, for the intro, and thanks for all the viewers that are with us. We have two goals in this webinar. The first one is not to be boring, and the second one is to add value, add knowledge to all of you guys. But before we start, I would like to start with a personal story. Almost 16 years ago, during the big recession of 2008, I was in the process of purchasing 3 buildings from a nice old Jewish person called Leon Rosenberg. Now, Leon Rosenberg was back then in his early 90s. He had been operating an old appliance store for the past 50 years and decided it was a good time to liquidate and sell his real estate. Again, 3 commercial stores and 2 apartments in the middle of the downtown. Now, during the negotiation period, we used to go to a nice diner. I won't forget, he liked to order his favorite lax dish. And I listened to this nice old guy telling me stories from the past. I mean, Leon told me many stories, but 2 stories I remember clearly. Leon always repeated that in his early childhood in the 1920s, he was poor. They literally did not have money to buy food. They didn't have money to eat. They didn't even have money to buy new shoes, so he had to go without shoes, bare feet. That was the point where Leon decided he would not be poor and that he would work hard and save money to change the destiny of his family and kids. So during his working years, he invested his money in his pension plan with his pension plan provider, which invested it only in stocks and bonds, under the assumption that when he would retire, the money in this account would accumulate and there would be enough money to retire with dignity. But then, everybody knows, came the recession of 2008, the stock market collapsed, and all the money Leon had saved through hard work for his family and kids just lost its value. Imagine what would have happened if Leon had known that he had another option to diversify and invest a portion of his retirement funds in real estate. And by doing that, he would have gained a few things: hedge his money from inflation, diversify, defer, of course, his taxes on the income being generated from these investments, and much, much more. So there is another way of investing our retirement funds, and that's investing through a self-directed IRA. You can open a self-directed IRA account, roll over the 401k or your IRA funds to this account, and buy alternative assets with these funds and enjoy the appreciation, the cash flow, and all that real estate can offer. Now that we understand through the story of Leon Rosenberg how important it is to invest a portion of our retirement funds in real estate, let's talk a little bit about the retirement plans that are out there. What are the differences between each plan and how we can allocate them to real estate investments? And we have here Zach and Ryan from Madison Trust Company will help us understand how we can invest our retirement funds in real estate using our self-directed IRA. And Zach, are you with us, right? I don't see you here. Can you please tell us a little bit about your company?
Yes,
we exactly doing? Yeah. So basically, Zach, the question is, I have $100,000. I would like to diversify right now. I want to allocate a portion of my funds or my retirement plan into real estate. What do I do? Go ahead, please.
Yeah, so if you want to do that, then you would need to have a self-directed IRA. And I'll kind of jump into that in 1 second. So first off here, we want to understand exactly what a self-directed IRA is. And we could start by saying what it's not. And what it's really not is an IRA, what we call a regular IRA that people are very familiar with. That's an IRA at Charles Schwab or maybe Fidelity, big name companies that people know of and already have IRAs at. And those IRAs allow those individuals to invest into stocks, bonds, mutual funds, and publicly traded investments. And then also people have 401ks, which is a different type of retirement plan, an employer plan, or if they have a pension or a 403b. Those are types of retirement accounts that you have with an employer. And they also allow you to invest into usually publicly traded stocks, bonds, mutual funds, and things along those lines. But both of those, what they have in common is they really don't allow you to invest into certain things, what we call alternative investments that self-directed IRAs really specialize in. So that is what Madison Trust Company is here for. We are a passive custodian, and we allow individuals to open up this self-directed IRA so that they could tap into those retirement funds they have in their retirement plans with their former employers, or they have at Charles Schwab or Fidelity. They could tap into those, send over 100K to their self-directed IRA, and make that investment with a real estate syndication fund into real estate directly, private placements, startup companies, promissory notes, precious metals, Arabian racehorses we've even seen. So there's many different things that they're allowed to invest in with a self-directed IRA, pretty much the private industry over here.
So one second, let me stop you for a moment. What you say is, let's say I have $100,000 that invested in my IRA. Now, from my experience, when I speak to my friends, they have money in their IRA accounts, and I'm asking their 401ks accounts, and I'm asking, do you guys know where you're investing your money? Most of the people that are investing in stocks, mutual funds, they don't know. They just put the money there. So what you're telling me right now is you can choose where you can invest your money, which investment. I mean, you can have more control, even though you can tell your provider, I would like to invest in this mutual fund or that mutual fund, but most of the people are not doing that, correct?
Exactly. Yep.
Yeah, so we see people bringing investments to us. People get very creative, whether it's they have a friend with a private placement, real estate development, physical real estate to use as for an investment. So there's many options people can bring to us in regard to a self-directed IRA. And that's the value of it. It is truly self-directed.
Yeah, and the really the best part about this type of investing with a self-directed IRA is that you're using your funds in a tax advantage way. And this is with accounts like traditional IRAs and Roth IRAs. You can open up a self-directed traditional IRA and have all your investments that you're making into these real estate syndications or into real estate properties directly. You get all that revenue tax deferred. So you're not paying taxes on it right now. You're going to pay taxes on it way in the future when you take that money out of your retirement account. So it's a really great way to be tax advantaged there.
So let me understand. Let's say someone is working with Google, Amazon, or someplace else. He has, let's say, $500,000 in his 401k, and he's telling me, Yaron, listen, I would like to invest with you $100,000. Okay, so how does it work? I mean, he's transferring the money to you guys to a self-directed IRA, and we'll speak about the technicality later. He invested in the project itself, and all the dividends, distributions that he's getting are free of tax. So basically, it's deferring it, correct?
Exactly.
Yeah, that's with the traditional account. So yeah, all that money that's coming back from that investment is tax deferred, and he's going to have to pay it back when he takes the money out at the end of his retirement or something along those lines, whenever he chooses to start taking it out. But then if they have a Roth account over here, a self-directed Roth account, then those are all tax-free revenue streams. They're never having to pay taxes on it because they already paid taxes on it beforehand, before they put it in their retirement account. So now everything moving forward, all the money that they generate in that account is completely tax-free.
Exactly. So as they hit 59.5, they're good to go from there with a Roth IRA. They can take it out tax-free at any time.
Okay, interesting. Now, I see here questions. People are asking questions, but we'll answer all these questions at the end of the presentation. And if someone there has, you guys can ask us everything. I mean, we'll try to address all the questions later. Go ahead, guys.
Perfect. Yeah. So we'll go into the next slide here. Ryan's going to tell you a little bit about his job. He's an account executive over here at Madison Trust Company. So Ryan, go ahead.
Sure, yeah. So I'll preface this by saying, please schedule a call with me to discuss this, obviously more in depth, and client-specific questions, obviously I can help you with. But the general process is open fund invest within a self-directed IRA. So the first step is opening a self-directed IRA with us. That only takes about 10 to 15 minutes. The second step being the funding process. So depending if you have your money, in a 401k, 403b, pension plan, defined benefits plan, traditional IRA, Roth IRA, that's something that we can move over to us to make an investment within your self-directed IRA. And then third, you bring that investment to us. We need to take a look at the documentation regarding the investment, make sure it's in the correct titling, because in this case, it'd be in your IRA and not your personal name. And then you'd instruct us to make that investment within your self-directed IRA. And that pretty much completes the process.
Exactly. Yeah, it's a very simple process. We focus on those three main steps. Ryan's really here for that first step to help you out with that onboarding side, but he's always here throughout the process. And then I'm also here to make sure that things run smoothly, especially with processes number 2 and 3 is getting that funds into your account and then making that investment.
So let's say right now, I have the $100,000 again in my 401k account. I would like to invest it with a promoter, with a friend of mine that is he has a nice project. How long what's the technicality? I mean, what's the next step? What should I do? Let's say I'm calling you guys. How long it takes to open a self-directed IRA? What are the risks involved in opening
So generally,
I mean, I'm sending $100,000 to whom?
Right. Yeah. So it takes about 2 or 3 weeks to open up a self-directed IRA with us. And in the case of a 401k, we're FDIC insured, so there's no reason to worry about that. But in regard to administering the 401k rollover, you'd be contacting your plan administrator, making sure that they're eligible, those funds are eligible to be rolled over. Because in the case of most current employers, unlikely, considering they don't want you to release the funds from their plan. So previous employer, always okay. Current employer, if you're 59 and a half, you can most likely still move those funds over. I
got it. Now, you know what? I see here a question from Amos here. Maybe you can. I know it's not. We plan to do the question at the end, but he's asking an interesting question. Can I? I'm going to read you the question. Can I take a loan to purchase the property? What happens to the additional money I use in addition to the money I have in IRA? Will that become part of my IRA when I sell the house? I mean, first of all, before we answer this question, can I use my IRA account to purchase private houses, or I must invest it through a syndicator or a fund? How does it work? And I mean, you can also answer the question Amos just asked, of course.
Absolutely, yeah. So you can buy a property through a self-directed IRA. That answers the first question there. In regard to taking out a loan for the property, it can be done, but it would have to be a non-recourse loan. And then non-recourse just meaning that the only recourse in the case of default is the collateral. So you can't secure this with personal funds, or can't be secured by your personal credit score.
One second. I'm sorry, Ryan, that I interrupted you in the middle of the sentence. Let's say I have $100,000 and I would like to purchase a property for $200,000, meaning I need to take a $100,000 loan from the bank, correct?
Correct.
Under the assumption, I believe that this house will be worth $400,000. So I'm going to roll over my $100,000 to Madison Trust, to my self-directed IRA, correct?
Exactly.
I'm going to go to the bank, ask them to give me $100,000 debt. But the bank will ask me who's personally guaranteeing if the bank will ask me to personally guarantee the transaction, it's not going to be a legitimate transaction. That's what you mean.
Exactly. Yeah. So there are non-recourse lenders. We do have a couple that we deal with. It's less likely, obviously, than a regular, standard loan, just because the risk is a little higher for the banks. But non-recourse loans are possible, and that's the only way to do it through an IRA. There's no personal guarantee and no commingling of personal and IRA funds.
Got it. Okay, very interesting.
Perfect. Yeah, so we'll go on to the next spot here. What are the benefits of a self-directed IRA? And this is a very important because I believe there are a lot of benefits here, and we just have three of the main ones that we see listed here. First one is the portfolio diversification. So just like Yaron's story in the beginning, really focusing on diversifying your retirement account and not keeping all your eggs into one basket. So let's say you have all your retirement money in an IRA over at Charles Schwab or Fidelity. All your money is pretty much in publicly traded stocks, bonds, mutual funds. That's kind of like having all your eggs in one basket. And a good way that we see people utilize a self-directed IRA is obviously they keep some of their portion of their funds in those stocks, bonds, mutual funds, but they take some of it out and make investments into these alternative investments like real estate syndications or real estate properties or promissory notes with people. And they do this with their self-directed IRA. So we see it as just a very, very good tool to diversify their retirement account and to kind of spread their eggs out just so they can have different ways of making money. And then the next one is kind of ties in with that, is that hands-on investing. This allows you to, let's say you have a friend with a startup company, or if you're very close with Yaron or Roy over here and you want to invest with prime equity, you're familiar with them, what they do, you're allowed to take your retirement funds and invest with them instead of just investing into Amazon, who you don't know who's over at Amazon. You're just investing into their company. This way you're allowed to invest into certain things that you're more familiar with. If you're very niche in the real estate market and you want to get into that with your real estate or with your retirement funds, this allows you to tap into that and invest into what you're really familiar with. And then the next one down here is the stability of these types of investments. So there's some investments with their self-directed IRA that are more reliable of a revenue stream, such as certain real estate investments that you can make, certain investments with companies of people you know that you kind of know what's going on and you know what the returns might be in the future. It might be a little more reliable than just the volatile stock market that kind of goes up and down. You don't really know where it's going to go. So that's really a main benefit of self-directed IRAs. But I would say these are the three main ones. There are a lot out there. And
So
the best benefit is really just to grow your retirement wealth utilizing this type of investing.
let me ask you this. Let's say I have, again, $100,000, maybe more. I found a nice promoter, real estate guy that I can invest with them. Now, I want to understand a little bit because a lot of our money, one of the main benefits here is deferring taxes. Even when you make a lot of money, eventually you need to make a good tax structure. So let's say if we're purchasing, and this is usually what we do in our project, we have a refinance event. Okay, so let's say you invest $100,000. After 3 years, I'm giving you back the $100,000 to your IRA account, correct, Ryan? I give you the $100,000 back to your account as an equity back because we refinance, we give you back the equity. This is not considered a tax event, correct? Because I'm giving you back the equity.
Correct.
Now, you can use this money and invest it someplace else, and you still get income from the property we just refinanced because you have $100,000 in shares. So all the money. So think about it. You invested $100,000 with someone, with a developer. He gives you back the money after 3 years. You're with your money back, invested with someplace else, and you're still getting stream of income from that project.
Exactly.
Until realization event, which is tax-free, tax deferred, or it's tax-free if it's a Roth IRA, correct?
Correct, yep.
Which is sounds
very
good.
Very nice.
Yeah, that's a very common strategy. People having access to funds coming back, they move those over to their, conventional IRA custodian. When a lot of cash starts sitting into their account, they want interest-bearing accounts, mutual funds, stocks, etc. And they're still able to keep both accounts, keep it diversified, keep it in stocks, bonds, mutual funds. So
exactly. When you make the money off of these investments, obviously we're just the custodian, so we're here to serve the client that we have. So if they want to reinvest it into another private placement or another private investment over here, then they could definitely do that. But like Ryan said, they could also send it back to their Charles Schwab or Fidelity account and put it back in the stock market and then send it back over if they find something else they want.
No, but think about it, when I'm thinking about it, if I have 100,000, let's say in a regular world, I have $100,000, not an IRA, not the 401k. I invested with John. He did a refinance event. After 3 years, he gave me that money, okay, which is great. But then all the income that I'm getting from that property, I need to pay taxes. Now, IRA, if you invest from your 401k, you receive all your equity back. You can invest it again through your IRA, and all the money that you receive, if it's a Roth IRA, it's free, zero tax.
exactly.
And you don't have any dollar in the project itself. You're out of the project already. Correct?
Exactly. Yeah.
Yeah.
Sounds good?
It's a great way. It's a great way. So yeah, I'm gonna jump into our next slide right here. And that's kind of what is Madison Trust Company and what is the advantage of using our services as a company. So Ryan is going to tell you a little bit about this.
Sure. Yeah. So I'll run through the Madison Advantage, what we like to call it. So we'll start with our client support. So there's people just like me and Zach on many of teams that deal with the clients, hold their hand through the process, the open fund invest process, and we're there every step of the way. In addition, we do charge a flat fee, so we don't feel the need to, base our fees based on the asset-based holding fees or anything like that. So flat fee structure, we don't think penalizing people based on a good investment is a good business model. So that's why we don't do that. And yeah, we have a lot of good professionals. We have many teams here, our support team, sales, sponsors like me and Zach, our transfers team and investments team to help with every step of the process, certain titling, investment documents, transfers from other retirement accounts. And yeah, we're just here to help the client. And some generals about Madison Trust, we have over 20,000 clients, 4.2 billion in assets under custody. And yeah, over 2,000 client testimonials. So I'd encourage everyone to look at our online reviews. They're pretty much 5 stars across the board. It's really a testament, to everybody here, just streamlining processes and making sure everything's as efficient as possible.
Very nice. Very nice.
Yeah. So yeah, go ahead.
So if there is any one that would like to ask Zach and Ryan a question, if we didn't cover everything, he's more than welcome to ask.
So I'll just go real quick, or we'll just mention this quick disclaimer. We love a little disclaimer here. But yeah, pretty much we are a passive custodian. We don't provide this advice. We're simply just giving you the education right now in this webinar right here. But we definitely recommend that when you're making these decisions, definitely talk to your financial advisors or your tax professionals that so that you can make the correct decision for you. We don't give advice on certain things that you should do specifically, but we will make sure that everything is done properly over here when it's going through our processes.
I got it. So to those of you guys that just joined us, we just discussed a way that you can pay zero tax on income. I'm going to make a summary of our discussion. When you have all your equity back on some cases or some projects, okay? And I don't see we have any other questions. Apparently, we addressed most of them. So do we have another question? Let me see.
Yeah, we do. Can I contribute cash in addition to the property I'm buying? Will that become part of my IRA when I sell the house?
When you say cash, what does it mean? Cash money that was
equity.
Not more equity
And
out of the IRA?
yeah.
So out of the IRA or into the IRA?
Right. So he can contribute pre-tax or post-tax funds up to $7,000 for 2024 into his
No,
IRA.
out of the IRA. But no, it's not, Amos. I don't think
Oh,
it's
gotcha.
meaning. Let me just understand, Amos, and you tell me if I understand it correctly. Let's say I have $100,000 in my IRA account, and I found a great deal, and I would like to invest $200,000. So meaning $100,000 out of my IRA, I'm gonna roll over to my self-directed IRA. Can I add an additional $100,000, and it can be, and can it become my IRA when I sell the property? That's the question.
So, yeah, so in that case, it wouldn't become part of your IRA. It would have to be a co-investment rather than a commingle of funds. So there are a lot of rules. So it is possible, generally done through a multi-member IRA LLC, which we can discuss at a different time. If they want to schedule a call with me, I can discuss that more in depth. But basically, assigning the ownership percentage at the beginning has to stay consistent. So any new contributions have to be proportionate, or any distributions personally or from their IRA has to be proportionate from the other source. So if they say they're 50-50, it's a $100,000 house. They're contributing $5,000 for 2024 into their IRA. They have to put in $5,000 in cash, so in tax deferred money.
I got it. Okay. So we, as you guys know, we're always looking for the next project, and we're always looking for sophisticated or creative ways for our investors to make money. And one of the creative ways that we just heard of is the 401k and IRA. And we're promoting right now a project in New Jersey, which is open for investments through 401k. And if Roy can share us the screen.
Yeah. I'll just mention real quick before I stop sharing. This is me and Ryan's direct phone number lines. You could text it, you could call it at any time after this. And then these are also our direct emails. So if you have any questions after this, or if you want to get started, then please reach out to us and we'll be very happy to help you out.
Definitely. So in the past 3 months ago, we found also this gem, 679 717 State Route 23 in Pompton Place, New Jersey. It's a prime retail strip center. We're in the process of raising money from our investors and new investors, and we're also open to receive 401k and IRA accounts. And I'll show you in a moment where what is the opportunity as a straightforward deal from the real estate portion of it, and of course from the 401k and IRA portion of it. So let's talk about project info. What's a little bit about the project itself. So the property is comprised of 30,000 square feet of retail stores situated on 100,000 square feet of land in a strategic location. The owner owns this building for the past 40 years as the second generation, and he got to the point that he's tired. He would like to sell the property, and as you can see, the building itself, the facade, it's tired. It has a lot of potential to upgrade for upgrade. The location itself, Route 23, it's which is easy to get from Route 23. I mean the property itself. You have 50,000 cars passing through this route every day, which means a potential of a lot of customers, clients who can enter this shopping center. And you can also see there are a lot of national tenants on Route 23, which makes it a great location. You have TJ Maxx, Stop and Shop a few blocks from there, Walmart, Best Buy, and other, which makes it a very centralized location. So what's the opportunity here? And I'm talking about just from the real estate point of view. There is a furniture store who takes about 18,000 square feet of this building. Believe it or not, the furniture store is there from 1979. They don't have a lease. The idea is to change the mix of the tenants, of course, work with them, bring stronger tenants. By the way, this furniture store is paying only $13 per square feet, while the market price starts from $24 per square feet for similar spaces. So there is a lot of opportunity to raise the rents, raise the cash flow, therefore to raise the value of the building itself. And you can see the comps here of similar properties that are rented in the area, $37 per square feet, $30 per square feet, $25 per square feet, which they are charging for 15,000 square feet. I'm not talking about the small spaces. So there is a lot of value, or there is a lot of place to raise the value of the rents itself. But not just the rents are low, and not that there is a potential to raise the rents and to fix the building. The building itself, when we're looking at new projects, we're looking to purchase buildings or properties below the replacement cost, which means just to build a building like this, 30,000 square feet, not including the land. I mean, let's say the land is $1.5 million, half $500,000 per acre, and it's almost 3 acres, 20 acres and a half. It's going to cost you around $10 million to build the building, purchase the land, carrying cost, development fee, while we're purchasing the property for $5 million only. And above all these advantages that I just mentioned right now, we convinced the owner to give us owner's financing with great terms, 2 years for 6% and 3 years for 7%, which is amazing. You don't need to pay all the fees to a commercial lender, all the points, etc. And it also makes the cash flow from the building more lucrative. So what's the strategy? The idea is to purchase the building, renovate it, change the facade, replace the current tenants with new tenants, increase the rents to the market rent, refinance after 2 to 3 years, and sell it after 5 years. So to those of you who are interested, telling themselves, listen, it's something that I would like to invest, they probably ask themselves, okay, what's the investment model? So let's talk a little bit about the investment model. Let's say you invested $100,000. After 3 years, we're refinancing the building after we change the mix of the tenants. We fix the building, we renovate it, we go to the bank, we're telling them, listen, we would like to refinance. Our idea is to return 70% of the equity back to the investors, enjoy 2 more years of cash flow, and then sell the property with the assumption of the cash on cash to be around 67%, and the IRR to be around 18.5%. Now, this is from the standpoint of a regular investment, okay? But if one has a 401k or an IRA that he would like to roll over to this fund, and if it's a Roth IRA, it's even better, he doesn't have to pay any taxes for a Roth IRA on the income from the property itself. And when we refinance the property, he can take his $70,000 or the equity that he just received and invest it in someplace else, which makes it even better than regular investments. So if there are any questions from the audiences regarding what we just spoke about, feel free to write. And if there are no other questions, I would like to thank Roy, Ryan, and Zach for joining us today. And if you would like to get a little bit more information about the project that we're currently promoting, you can write us at info@primeequitynyc.com. Feel free to send us any questions, and we'll get back to you as soon as possible. So Ryan, are you guys still with us?
Still with you.
I don't see you, just that's the reason. I can see the presentation. So thank you guys. I mean, Madison Trust is a great place to open your self-directed IRA. And of course, if one would like to invest with us, we'll work with these guys who are professional. They do it for a long time. And that's about it. Thank you so much, and hope to see you soon at other webinars that we'll have. Thank you.
Yes.
Right, guys,
Thank you to everyone.
Thank you,
And
everybody.
thank you to Yaron and Roy. Appreciate you guys having on. having us on here. I think we can have a good relationship here.
Absolutely. All right. Thank you.